Are you struggling with debt and wondering how you can pay it off faster in 2026? The thought of paying off credit cards, loans, or mortgages can seem overwhelming, but with the right strategies, you can tackle your debt more efficiently. In this video, we'll cover 5 smart and innovative ways to pay off your debt faster without drastically changing your lifestyle. Whether you're looking to use technology, smart financial moves, or some creative tactics, these methods can help you make significant progress on your debt. Let's dive into how you can start reducing your debt burden today. 1. The cashback snowball. One of the smartest ways to accelerate debt repayment without making any lifestyle sacrifices is by using your cashback rewards. If you have a cashback credit card, you've probably been accumulating points or cashback from everyday spending like groceries, gas, or dining out. Instead of letting these rewards sit idle or spend them on treats, put them to work and make them part of your debt repayment strategy. The cashback snowball strategy works by linking your cashback credit cards to a dedicated debt paydown tool. Every cent of the reward points or cashback money you earn from essential spending is automatically funneled as an extra payment toward your highest interest balance. This allows you to harness the power of your normal spending and convert it into a debt reduction strategy. By doing so, you are essentially using the rewards you have earned from routine purchases to accelerate your debt payoff, which helps you tackle the high interest balances faster. The beauty of this method is its simplicity. You don't need to make any major changes to your lifestyle or budget. All you're doing is redirecting rewards that you would otherwise spend or forget about and using them to reduce your debt faster. Over time, these extra payments will have a noticeable impact, especially on high-interest balances like credit cards. Even small amounts add up, and with consistent use, the effect of these rewards can significantly shorten the time it takes to pay off your debt. You'll start to see your debt decrease faster without feeling like you're sacrificing anything. It's a low-effort but highly effective way to give your debt the extra push it needs. 2. High-yield micro-arbitrage. With interest rates fluctuating, there's an opportunity to use the bank's tools against them. The high-yield micro-arbitrage strategy is an excellent way to make your debt payments work harder for you without doing anything complicated. The concept behind this strategy is to take advantage of the interest rates on your emergency fund and use them to reduce your debt more effectively. Instead of rushing to pay off your debt as soon as you get paid, move your emergency fund into a high-yield savings account, HYSA, that earns 4 to 5% interest. When you receive extra income or have funds allocated for debt repayment, hold that money in your high-yield account until a day before the bill is due. This allows your money to earn interest while it's sitting idle, giving you a higher return than you would get in a regular savings account. While your emergency fund is designed to be easily accessible, using a high-yield savings account increases its potential to grow without adding risk. Once the bill is due, you simply sweep the principal plus the interest earned in the HYSA and apply it directly to your debt. This way, you are taking advantage of the interest earned over time rather than letting your money sit in a standard account doing nothing. By earning interest on the money you would otherwise use to pay off debt right away, you effectively reduce the amount you need to pay, making your repayment strategy more efficient. This is especially helpful for larger debts, as the more money you have in the account, the more interest you will accumulate. Over time, compounded interest can add up and significantly reduce your total debt burden. This approach requires a bit of patience, as you need to leave the funds in a high-yield account long enough to earn meaningful interest. However, with a large emergency fund, the payoff can be quite substantial. It's a simple yet powerful way to turn your savings into an asset that reduces your debt load more quickly. This strategy ensures that you are making the most of every dollar, both by reducing your debt and by earning interest, making it an incredibly efficient way to handle your finances. 3. AI-driven roundup aggression. In the past decade, micro-investing apps became a trend, helping people invest small amount of money from everyday purchases. But in 2026, the new move is micro-repaying apps, which allow you to round up every transaction and apply that change to your debt. This method uses AI to automatically round up every purchase to the nearest dollar and then applies the change to your principal balance on a daily basis. For example, if you spend $4.50 on a coffee, the app will round it up to $5, with the extra 50 cents being applied directly to your loan or credit card debt. Over time, these small, daily hits to your debt can add up, significantly reducing the total interest accrued over the life of a loan, such as a mortgage or car loan. This is particularly effective for high-interest loans, where even a small reduction in principal can have a meaningful impact on the amount of interest you pay over time. The reason this strategy works so well is that it consistently chips away at your debt without requiring a significant change in your spending habits. It's an easy, automated way to make sure you're paying off your debt faster. The AI-driven roundup feature keeps you on track and helps reduce the temptation to spend those small amounts elsewhere. With these micropayments happening automatically, you'll be surprised by how quickly your debt starts to disappear, all while you continue with your normal life. For the side hustle sweep, income segregation. One of the biggest challenges in paying off debt is a tendency for extra income to get swallowed up by lifestyle inflation or lifestyle creep. When you earn additional income from a side hustle or gig work, it can be tempting to spend it on things you don't need. But if you treat your extra income differently, you can use it to make major strides in paying off your debt. The side hustle sweep strategy involves setting up a separate digital bank account, often called a neobank, specifically for side hustle or gig income. The rule is simple. 100% of the money in this account is automatically transferred to your debt servicer every Friday. This segregation of income creates a psychological barrier, since you never feel this money in your main spending account. It's easier to be aggressive with paying off your debt. The beauty of this strategy lies in its simplicity and the way it removes temptation. Since you never see the extra income in your regular spending account, you're less likely to use it for unnecessary purchases. It's an effective way to stay focused on your goal of becoming debt-free by making the extra income invisible and funneling it directly into debt repayment. You create a powerful habit that accelerates your debt payoff process. 5. Tactical balance transfer surfing. In 2026, many fintech companies offer enticing 0% APR introductory offers to win your loyalty. This presents an excellent opportunity for those looking to pay off high-interest debt faster. The balance transfer surfing strategy involves identifying a 0% APR introductory offer from a credit card or loan provider and transferring your high-interest debt to that account. The strategy is to calculate the exact monthly payment needed to pay off your balance before the 0% APR promotion ends. By doing this, you stop paying rent on your money. Instead of paying interest on your debt, every dollar you send goes directly to the principal, which significantly accelerates your freedom date, sometimes by months or even years. Balance transfer surfing requires discipline because you need to avoid taking on new debt while you're using the 0% APR window. However, if executed correctly, it can help you save a significant amount in interest payments and help you pay off debt much faster. This strategy is ideal for those with higher balances and the ability to commit to a fixed monthly payment plan that eliminates the debt before the promotional period expires. There you have it. The top 5 smart ways to pay off debt faster in 2026. From the cashback snowball strategy to balance transfer surfing, these tactics allow you to accelerate your debt repayment without drastically changing your lifestyle. The key is consistency, strategy, and being smart with the tools at your disposal. If you found this video helpful, don't forget to like, share, and subscribe for more tips on managing your finances and paying off debt. Let me know in the comments which strategy you're most excited to try. I'll see you in the next video.